Hello student, now today in this session of class 11 accountancy, we will be going to discuss about the Indian accounting standard. With the globalization where the business was being carried at the international level and there was the need of getting few basic standard rules and the regulations for preparing the books of accounts so that those books of accounts can be understood by each and every person at the global level. So there was a need of setting the accounting standard at the global level, and for this the international accounting standards were derived, and later on these were being replaced by international financial reporting system. But what was the main thing that when we were talking about this international reporting system, so the business environment in the various countries was different, and according to the needs and the requirements of the business of a particular country, we have to frame the accounting standards which were being feasible as per the need and the requirement of those country. So when we are talking about the Indian scenario, the business environment in our country, so it was very difficult to make the use of the international financial reporting system because some of these systems were not being technically matching with the Indian business scenario. So what we have done, we have converged those international financial reporting system and we have set a new set of guidance or the instructions in the form of Indian accounting standards. So we have developed the Indian accounting standards, and that is just a convergence of the international financial reporting system. So Indian accounting standards are being notified under the Indian Companies Act 2013, and these are applicable to the companies who have been listed in the stock exchange and the companies whose worth is rupees 250 crore or more than that, and their holdings, their subsidiaries, associates and joint venture companies. So these were the three companies which were being following the Indian accounting standard. The norms that which companies will follow the Indian accounting standard: first, it should be listed in the Indian stock exchange. Then second one, the net worth should be more than 250 crore rupees. And third one, it can be a subsidiary or the holding or the joint venture of any of these companies. So these were the companies which were following the Indian accounting standard. And the objective behind the preparation of the Indian accounting system was that we want to make the use of the principles and practice them according to the law of a particular country. So we have prepared those accounting standards which can be implemented by the accountants in the country, and it should be applicable according to the laws of the country. Now, what is the comparison or differentiation between Indian accounting standard and the accounting standard? Indian accounting standard are based on principle, while accounting standards are based on the rules and regulation. So we are following the principle. The basic truth is that principles are being followed while framing the Indian accounting standard, and accounting standard in the normal condition are being followed by the basis of rules. Then comes Indian accounting standard involves the fair value concept, but the accounting standards are based on the historical cost concept. In Indian accounting standard, we follow the fair value concept, and in accounting standard, we follow the historical cost concept. So according to this, the meaning which can be said about the Indian accounting standard is like it is a set of accounting standards which are notified under the Companies Act 2013 and that converge with the International Financial Reporting System. So it is a set of accounting standard notified under the Companies Act 2013 and that converge with the International Financial Reporting System. And these are the standards which are clearly based on the principle and they follow a fair value concept. Okay. So when we are talking about the Indian accounting standard, so Indian accounting standard is following two assumptions. There are two assumptions which are being followed in Indian accounting standard. First one is the going concern assumption, in which the life of the business is assumed that it will continue and there is no intention of closing the business in the near future. And the second one is the accrual assumption. The accrual assumption means the transactions are recorded in the books of accounts on the accrual basis. That means when the occurrence of the transaction will take place or when the transactions are incurred, at that time only it should be recorded in the books of accounts. So these two assumptions are invariably followed by the Indian accounting standard. And what are the various statements which we are preparing in the Indian accounting standard? In Indian accounting standard, we are preparing the statement of financial position which reveals the exact assets and the liabilities of the business. Then we prepare the statement of performance, that is the income statement, through which we can get out the total amount of revenue and the total amount of expenses being done, and we can find out the net income of the firm. Then we are preparing the statement of cash flow, that is cash flow statement. Along with that, we are also preparing the various types of reports, auditor's report, director's report. So these are some of the statements which we have to prepare while preparing the books of accounts according to the Indian accounting standard. And then we have to prepare one more statement which shows the change in the equity, that is the statement of change in the equity of the owner. So equity of the owner changes, how it will take place, that the amount of assets and the liabilities when they are being differentiated. So what is the total equity or the total amount of capital which is being lying there with the owner. So these are some of the statements which we have to prepare according to the Indian accounting standard. So hope now this thing is clear to you that what is Indian accounting standard and why it was necessary to prepare the Indian accounting standard. So on what basis these standards are being prepared, which assumption is followed in this basis, and what are the various financial statements which we are preparing in the Indian accounting standard. Thank you and have a nice day.